Okay, this is part two of the income statement video comparing Tiffany and Flower Foods. And notice how pretty that the income statement is for these companies. That's because I went and put the numbers together myself and put them into a common template. That's a fairly that's fairly common out there in the real world. That's because different companies report their stuff differently. There is either more or less detail or more or fewer categories reported by the individual companies themselves. Generally, an income statement starts with revenue and ends with net income, and the expenses are laid out in some form or fashion similar to this. But again, the level of detail differs. If we look at Tiffany's, we flip over here and look at what they actually filed in their 10K. Now, the 10K is the company's actual financial statement filing, and 10Ks are filed by publicly traded corporations, and they follow a set of rules on what they have to contain, but they're not necessarily constrained by they're not rigidly constrained by how they report it. If we see what Tiffany's is reporting here for a year ended January 31st, 2020, 2019, and 2018. Now, the year ended January 31st, 2020 is basically fiscal year 2019. There's 11 months of 2019 and just the 1 month of 2020. A lot of retailers who have a Christmas season have a fiscal year that runs February 1st to January 31st, and that's so they have time to run Christmas through their financial statements. You can see that the template in here looks similar, but there's actually less detail here in the actual statement for Tiffany's than the level of detail I'm providing. For instance, they don't report depreciation expenses. I had to dig through the other 200 pages of their 10K to dig that out. Their operating income, they're not calling it operating income, they're calling it earnings from operations. Okay, well, if you take sales, subtract cost of goods sold, subtract selling, general, and admin, generally speaking, now you're at operating income. There are other slight differences in here, but this is a pretty simple example of a company's income statements, especially compared to Flowers Foods. They're reporting Tiffany's is reporting their numbers in millions of dollars. So when it says up here, 4,000, 424.00, that's 4,000 millions or $4 billion. If we switch over to Flower Foods, theirs is a little different. You can see there's a lot more detail in what they're reporting. They're not calling it net sales. They're calling it sales, but it's actually net sales. Sales are net of any returns and allowances. So if you sell somebody a diamond ring and they bring it back and get a refund, then it comes off of the sales column. So sales is net sales less returns and allowances. Now, their cost of goods sold, they're listing materials, supplies, labor, and other production costs exclusive of depreciation and amortization shown below. Okay. You also see they don't have something called gross profit in here. A lot of companies don't do that split in there. All right. Tiffany's does. Flowers Foods doesn't. All right, so generally speaking, though, everything follows the same format. The cost of goods sold is usually first, depreciation and amortization, selling, general, and admin next. Most of the time, depreciation and amortization is folded into either cost of goods sold or selling, distribution, and admin costs, or selling, general, and admin costs. Now, if you subtracted the material supplies and the selling and distribution and the depreciation from sales for flowers, you'd have operating income. They didn't give you the subtotal for gross profit. They don't give you a subtotal from operating profit. Not the way we usually lay it out. They come down here and their income from operations, which is shown here at 225, is net of a bunch of one-time charges. Okay, so bottom line, when you look at something really pretty like this out of an income, where the income statement looks really nice, it's usually because an analyst has gone through there and cleaned this stuff up. If you don't have an analyst, that will fall to you. And so you got to know the general layout of the income statement. Now we want to separate the operating income or the normal operating income from these one-time charges, such as with flowers. They had impairment of assets, $6 million. It happened that one year. It didn't happen the prior year. It didn't happen the year after. Multi-employer pension plan withdrawal costs. It's a one-time thing. Recovery on loss of inferior ingredients. Okay, well, they apparently had 3.2 million dollars worth of bad flour one year. All right, so those are the things you don't expect to happen again and again, and that's why we usually see people go through here and make adjustments. Analysts go through and make adjustments to make it easier to read and to use for forecasting the future. All right, now from this point, what we're going to do is start doing some comparisons in part 3.